we're going to get kicked off here in 5, 4, 3, 2, 1. We're in it, baby. We're in it. Let's talk about the Conquistador, our beautiful apartment complex in Merriam, Kansas. Was brought to you by the Regal Fund. So, guys, we are very, very excited about this opportunity. So, thank you for joining us tonight. We got a great number of people on the call, so we're going to discuss an excellent opportunity here in Kansas. So, as we keep going, before we get into anything else, though, I do want to let you guys know that there is a chat and Q&A function on your Zoom. So, if you have a question during the entire presentation, pop it in the Q&A, not the chat. Pop it in the Q&A. Ann Santos, one of our sponsors, she's going to be monitoring the Q&A and answering any questions live that she can. If she wants to pass it on to our excellent underwriting specialist Jordan, or market specialist Brandy, or asset management specialist Jenny, or even the man himself, Mr. Jake Dean, then we'll get a couple questions popped out to them as well too. So that's a little housekeeping items. Before we actually get into what is the Conquistador and what is it that we're offering, I do have to say, we have a disclaimer. Yes, we do. We do have a disclaimer. So this business plan is privileged and confidential information. Unauthorized use of this information manner will be strictly prohibited. Do not sell this information to anybody. The information contained in here is sources believed to be reliable. That's us, the sponsors. We express and we imply it's made an accurate information as properly, and all investors should conduct their own research for accuracy in all statements. Now, I'm not going to read it all, but I'm going to get to a little bit portion of it. We are not here to provide you tax, legal, or investment advice. So please contact your professionals with that. None of us here, the sponsors or any of our affiliates involved in this deal, can provide that kind of advice to you. This is a securities are subject to legal restrictions, and transfer and resale should not assume that we'll be able to resell any security. So please go through and understand your disclaimers before you invest in such a deal. Also, we are going to use terminology that's forward-looking, not in the past, right? So we will, seek, should, or expect, or anticipate, project, estimate, intend to, continue, or believe that this investment will be awesome. Because you're trusting us, our team, on this deal, we know that we're going to put all of our efforts into making this the most successful opportunity possible, so we can continue to work with you and make each other a lot of money. So the financial disclaimer, very similar information. Again, all the information here is not indicative of past performance, is an estimation of our business plan, and it's a darn good one, I'll tell you that right now. So with that being said, you've been displayed. So I'm going to keep on going now, right? So what's going to happen here tonight, we're going to talk about our property, right? The Conquistador. We're going to go through investment highlights, the overview, return summaries, of course, what's the return on this property, the market overview, some comparables, right? So we understand where this property is located now, rent-wise, and where we can get this property to with our business plan. And then we're going to introduce the management team, your lovely sponsors who are on the call here tonight. And then next steps, how can we invest in this deal? So with that being said, I want to pass it over to the lovely Jordan. Jordan's going to talk about the investment highlights of this deal, and she's going to get into it, all the nitties and gritties, and what this deal is all about. So Jordan, why don't we go ahead and pass it on to you?
Awesome. Thanks so much, Jeff. Hello, everyone. Good evening. My name is Jordan Hageman. I am the head underwriter on this deal, and I'm so excited to bring this investment opportunity to you. So let me talk a little bit about the Conquistador. The Conquistador Apartments are just 11 miles from the heart of Kansas City. This is an amazing area that is growing and developing, and we are so excited to get into this area. So a little bit about the property. It is 130 units, mix of studios to 3 bedrooms. We're currently purchasing this property for $16 million. And I do want to highlight our most recent appraisal came in at $19 million. So we are getting this $3 million less than current market value, which is huge when it comes to an investment. So because of the ability that we had to source this deal and our business plan that we'll get into a little bit later, We are able to provide returns. Our average annual return on this project is 18%. Our internal rate of return is 15.7%, and our cash on cash is 5.4%. And these returns are based off of the capital required to close this deal of $7,215,804. So on this next slide, we're going to talk a little bit more about that investment. So there is a 6% preferred return. If you're not familiar with that, that just means that as an investor or a limited partner, you'll receive the first 6% of your investment prior to any distributions being paid out to the management team. The minimum investment for this property is $100,000, and funds are due June 21st. One thing I do want to highlight is that this is a 4-year hold. So a lot of properties in multifamily specifically hold their properties for 5 to 7 years. We are holding this property for 4 years, hence the 6% preferred return. But because this property is already operating so well, great cash flow, occupancy is great, we're able to start distributions the 3rd quarter after close. This is super important. A lot of properties, especially value add investment opportunities, are holding off distributions until year 2 or mid year 2. So this is a great opportunity to get those distributions in that first year. So a few highlights. I had mentioned the 4-year hold, and the reason for the 4-year hold is we're actually able to assume the loan that the current owner has. The assumption fixed rate is at 5.99%, and there's 4 years remaining on the loan. If you're not familiar with the current market, this 5.99% is actually 50 basis points under market value. So we're able to get a discount on the lending as well. We talked about the value add model. So what we do is we take properties such as this property that may be mismanaged or need a little bit of renovation. We go in and we do those things and increase the NOI, or the net operating income. So one of those things is going to be the improvements to the interior and exterior of the property, which is going to equate to about $8,830 per unit. And we'll talk a little bit more about what that entails later. Another thing that really increases our value on this property, or forces the appreciation, is increasing the rents. So a big opportunity here is the loss to lease and the renovated premium. So as is right now, the property is only receiving on average $1,130 per month in rent. There's an upside of $62 currently to do absolutely nothing to the property. Just go in, turn leases, and increase that rent, that's $62. Now, as I mentioned, we've put aside some money to really renovate this property and bring it to a better asset class. And by doing so, what we're going to be able to do is capitalize on that renovated premium as well. So from that new market rent of $1,193, we're able to increase it on average an additional $219 to be at that new market rent with the renovated premium. So what that means is we're able to capitalize on an additional $31,677 on a monthly basis, which equates to just over $380,000 annually. That's going to increase our NOI and allow us to profit on this property.
Jenny, I love the force appreciation aspect of the value add multifamily, and right there, guys, is the reason why we do this. I mean, to be able to increase a property and earn $380,000 more, right, which increases the value of that property so much more exponentially. When we go to sell this baby, that's just right there. That's amazing. Sorry, I had to jump in right there. Sorry about that.
No, I appreciate it. I too love this. As I mentioned, being the numbers person, it just excites me to see these numbers growing and growing year over year. So I love it. Awesome. So this next slide is going to talk about the profit breakdown. So what does that profit look like year over year? So for the $100,000, which is that minimum investment, that initial investment, if you were to put $100,000 into this deal, your projected returns on the cash flows in years 1, 2, and 3. And then also in year 4, you'll see that additional equity share that you'll receive when we sell the property. So that $100,000 investment turns into $172,956 by the end of the 4 years. So in total, a 72.96% return. Awesome. So now that we've kind of gone over the property a little bit, what the investment is, I'm going to turn it over to my partner Jenny, who's going to talk a little bit about the business plan and how we're going to force that appreciation.
Thanks, Jordan. I'm Jenny Olivero with the Regal Fund. Super excited to talk about the asset management part of the deal. Jordan had an opportunity to talk about all the numbers, which is also as equally exciting. So next slide, Jeff. Managing our expenses, efficient operations, and increasing rents. Those are the keys to increasing our returns. We will partner with the highly experienced AMC Property Management Company. They currently manage over 144,000 doors across the country and already have an established presence overseeing other apartment complexes in the local area. So we expect to be able to minimize their overhead expenses with that. Their first order of business will be to grab that low-hanging fruit and raise below market rents, just like Jordan's talked about. Second order of business is to fully implement a utility RUBS program, collect those pet deposits, trash fees, storage locker rents, covered parking premiums, and laundry rents. Implementing these items alone, as Jordan mentioned, can make a significant impact to our NOI in a short amount of time. Next slide, Jeff. The next focus is our capital improvements. Here you see we have a high-level overview of our budget and what we plan on improving for the project. About 37 of the units have already been remodeled by the current ownership, so we have a pretty solid grasp of what finishes are being installed relative to the increased rents. We've set aside a hefty budget for replacing those old original furnaces and AC units, which is a must-have in the Merriam, Kansas climate, especially in the more desirable apartment complexes, as we plan on pushing ours. Next slide, Jeff. Our local market research has given us a roadmap as to what the exterior of the project should look like as it relates to our competition. So our focus will be on aesthetically placed designer landscaping, new parking lot striping, new custom paint to the stucco and the siding, upgrades to the pool and the common areas, fence repairs, and then other miscellaneous needed maintenance items. Next slide. The interior units will have a desirable facelift that forces the additional rent growth equal to our other nearby apartment competitors. These finishes will consist of new LVP flooring, designer painted cabinets, new countertops and backsplash tile, upgraded plumbing and electrical fixtures, stainless steel appliances, new paint, decorative hardware, and adding the desirable in-unit washer and dryers. We will also contract to replace on an as-needed basis those HVAC systems. Next slide. Effectively managing the takeover process is imperative to our operational success. Our property manager will navigate tenant communications and lease expirations. And based on the tenant contracts, we expect an average of about 5 expired leases a month over the 22 months. And that gives us a consistent, steady backlog of remodels to manage. With our team's extensive construction background and experience, our job is to navigate through typical construction work challenges. For anyone who's ever been part of a construction remodeling project, you are probably very familiar with the top 3. Number 1, delayed timeline, bringing the project in on time. Our job is to manage those realistic expectations. They have to be set. We have to have a critical path schedule. We need to know what work can be done simultaneously, how we can trade stack, and what critical path is a showstopper. And we schedule as if the work is going to happen, and we don't react to completed work. And that's how we decrease our timeframes. Communication with subs regularly. We may have daily communication. We might have AM and PM communication. And then keeping a advance order of our supplies. Number 2, being over budget. How do we manage that? We got to get accurate estimates. We have to go over them in detail. We don't take lump sums. We use well-written contracts. That's what protects us. We look for common scope gaps. As long as I've been doing this for 30 years, it never seems to surprise me that caulking is one of those scope gaps. Who caulks? Is it the painter or is it the tile guy when the tile's in? So that's our job, make sure those types of things don't pop up. And those are the things that sneak in and cause us to go over budget. And then lastly, managing the change orders, making sure that we're not being bid low and then piecemeal throughout the project for change orders. And then number 3 is the unknowns behind the walls, old pipes, wiring, unforeseen structural issues. And the best way to manage that is to have a contingency reserve, which Jordan has set aside. So I think here I've covered the highlights of the asset management scope and how we can effectively contribute to the bottom line. So now I'll turn it back over to Jordan, who can dive more into the project returns and more numbers.
Awesome. Thank you so much, Jenny. Well, I am excited to talk about the returns of this property. This is the part that everyone comes to hear. So first, I want to touch on our pro forma. So as you can see here on this first slide, this is our operational revenue. So it's going to show what we project our rent to increase year over year, how we are projecting our vacancies and concessions and bad debt. As you can see here, we've conservatively approached all of these numbers. We are seeing a major growth in this area in the rental market, and we are capturing some of that here. The other thing I wanted to touch on is the other income items. So Jenny had mentioned previously the RUBS, or the utility reimbursement. This is something that we are going to capitalize on with the help of AMC to capture some of that utility bill back. We're also going to implement some other income items that Jenny also mentioned, but I just want to highlight a few, such as pet rent, laundry, parking, putting those washer and dryers into the units. And as you can see, that will drastically increase our income year over year. Awesome. Thanks, Jeff. Here you can see our expenses for the pro forma for the next 4 years. As you can see, year over year, those expenses are growing. We want to ensure that we've built buffers into all of our expenses and ensure that we are operating at an effective expense ratio. It's important that you see our NOI is increasing year over year, which is also forcing that appreciation we mentioned earlier. The sources and uses. So how is the money going to be used? So as you can see here, the purchase price of that $16 million, the capital improvements budget is $1.277 million. We're also, there is an acquisition fee of $640,000. Our closing cost to assume that loan, do inspections, things like that are there in the closing cost and loan points. And then reserves. This is something that is very important to me, is those buffers and reserves, ensuring that we've built in safeguards for everything. We want to make sure that we are protecting our investors in every way. So there's reserves for operational and replacements, as well as taxes, insurance, and utilities. So total amount needed, or the total use of cash, is $18,729,804. So of that, the debt that we are assuming will cover $11,514,000, leaving that equity needed of the $7,215,804. The project return. So as a whole, this is what the property is projected to produce for returns. You can see the cash flow through the years, as well as what that equity at the back end will provide. So in total, we're looking at a project ARR of 19.4%, project IRR of 18.82%, and a project cash on cash of 6.56%. Awesome. Well, now that you know what your money is going to do for you, I'm going to turn it over to the amazing Brandy McDaniel, who's going to talk about why we chose this area and this property specifically.
So I happen to be from the Kansas City, Missouri area, born and raised there. I have a lot of experience with the neighborhoods in and around Merriam, Kansas. Merriam, Kansas is about 15 minutes from downtown Kansas City. So you can be just about anywhere that you need to get to, whether it's a Kansas City Chiefs game or the new Current Stadium or downtown for work. Can you go to the next slide, Jeff? So right here, you'll see some of the major employers in Kansas City are Hallmark Cards. That's a household name. H&R Block, Cerner. We have Lee Jeans also has their headquarters there. It's a great place for companies to move to. We've also recently got a Google data center. A Panasonic battery plant is bringing 4,000 manufacturing jobs, and that is actually located less than 20 minutes away from the Conquistador Apartments. Next. So when we talk about why Merriam, why as opposed to any other part of Kansas City, one of the big draws is the school districts there. Merriam, Kansas is in the Shawnee Mission School District, and the Shawnee Mission School District is actually recognized by the U.S. Department of Education as one of the best school districts in the country. So people actually move over to the Shawnee Mission School District just to get their kids in A-rated public schools. Next slide.
And you got cool artwork too, by the way.
They do, you know, they do. They actually have those unique sculptures all over the city.
Yep, excellent. I kind of want to go there just to see those artwork. It's amazing.
So if you can get to the next slide, we'll talk a little bit about the rent comparables. So I realize that that the numbers on this slide are super small, but the yellow line that you see in front of you is the market rent for the area. And if you look at the dark blue bar, that's the Conquistador. So you can see that we are currently the cheapest apartment in town. There you go. Thank you. So the way that Jordan underwrote this deal showed you on an earlier slide, there was about $282, if I'm not mistaken, to get to market. That's just where she underwrote it. There's actually more room to grow. Our plan is to leave that additional money there for when we dispose of the asset. So whoever purchases from us is going to have around $50 to increase rents themselves. Next. This just goes on to show you the 2-bedroom and the 3-bedroom, also way below market rate. So now I'm going to let Jake Dean introduce the management team.
That's right. How's it going, everybody? I'm excited to show you who you're working with. Now that you've met the brains behind this beauty of a property, I think that this is the most important part. You can have an excellent deal. You can have an awesome numbers. You can have the area that you want to choose and be in the right location. But if you don't have the correct management team running the deal, well, then your property is just going to go down. I've always said a good management team can make a great deal okay, but a great management team can take an okay deal to just skyrocket. So we have a great management team. So I'm excited to introduce you to everybody. First person I'm going to let take the mic is Sean Fuller. He is our key principal, and he is in the great state of Alaska, place near and dear to my heart. My brother's up there, so it's awesome to have him come in and do this deal with us. This is actually my first deal with Sean, and it's exciting because to have his perspective of what he's done in his life, where he's a serial entrepreneur, he's done several businesses. It's great to see that motivation behind this type of deal, because as you all know, being an entrepreneur is just not a 9-to-5 9 to 5 role. It is a passion that you have to be able to get up and go. So Sean brings that, which will help us inspire our tenants to pay, and that way we can take care of our investors as well. So Sean, why don't you go ahead and tell us a little bit about yourself?
Yeah, thank you, Jake. Excited to be a part of this team. This is a great opportunity. And so I am the fellow located in Alaska, and I'm not frozen all the time. So to Jake's point, I've been an entrepreneur since I was 24. I have bought, sold, developed about 13 different businesses. As far as a key principal in real estate, I've been doing that since 2007. And you'll appreciate this comment. I have and own real estate from Charlotte, North Carolina to Santa's Land, which is truly North Pole, Alaska. So this is a great deal. I'm excited to be a part of this team. This is an outstanding team, and we have a lot to deliver, and I think we have the right team to do it. So thank you.
No problem. And like you said, Santa, if you ever been up there, that's where they don't get dark. It's daytime and nighttime. It's next. You know, you can be up there and it's 12 o'clock at night and you're just hitting dusk. So it drives me crazy when I'm up there visiting my brother. But we appreciate you coming on and the faith in us and this deal, Sean. A little bit about myself. As y'all know me, my name is Jake, multifamily investing dean. All right. We are here to provide so much value and expertise in this property. I feel like I'm, was able to bring a lot of these team members together. We've met in various ways. And I've been, excited to watch everybody's growth through real estate. I've been doing real estate since 2000. I owned a mortgage company, as you all know, and then did several fix and flips, and then jumped in multifamily just a short time ago, only about 4 years ago, roughly. I've been in this. Since that time, scaled very quickly. I've opened a fund. We have, several doors and a little bit under 100 million under management right now. So we've jumped and run, and we're excited to see this property. And the people that are surrounding me, like, they're the ones that make this deal. And that's why I said we have them on this team. Jordan, as you've met her a little bit, but she's very modest in what she actually brings. She is the numbers and everything behind this deal. She understands the property. She understands the flow. The relationships is created with the brokers and the banks has been unparalleled. She is, without this deal, we are basically without Jordan, we are not on this call. So she is amazing. If you want to take some time to actually brag about yourself a little bit, Jordan, that would be awesome.
Thanks, Jake. Yeah, usually I'm the one behind the computer screen, so this whole talking about myself is not my forte, but I'll do my best. So I'm Jordan Hageman. As I mentioned earlier, head underwriter on this deal. Acquisition is, my bread and butter. I love sourcing these deals, underwriting them, understanding the business plan, and building an amazing investment opportunity like this one. I fell in love with numbers at a very young age and pursued a career in finance, as well as real estate. At the young age of 19, bought my first fix and flip and decided I was never turning back. So started in the fix and flip business, did that for a few years, and was introduced to multifamily. Multifamily has opened some amazing doors for me. I'm super excited to, continue to grow in this space and continue to work with an amazing team that we've got.
Yeah. And Jordan, like I said, she's humble about what she does. She is literally run this and just been perfect on this deal. So we appreciate Jordan. Now, to my favorite people in the whole goddamn wide world, Brandy and Jenny. I have known them for 3 years. They actually came to a class that I was teaching, and we became partners after that. We just bonded out over. Jenny has background in mixed martial arts like I do. She has a lot of discipline in that area, where she is just now, what, Jenny, your 4th black belt or something like that in Taekwondo. And then Brandy is the go-to, the glue that puts us all together. She's the one that calls you if you're having a bad day, saying, "Yo, what's up? Let me take care of you." And she's a badass in her own right. So go ahead and introduce yourself a little bit, guys.
I'll go ahead. My name is Brandy McDaniel. I have a background in construction. I've been a commercial electrician for over 15 years. as Jenny spoke earlier about how the construction and asset management can add to the bottom line, I'm here to help make sure that that happens. I've worked on many projects, some household names. Maybe you've heard of Facebook, Google, Twitter. I've run projects for all of those companies.
Who are those guys again? I don't.
Yeah,
I've
I don't know if you've ever heard of
Who are
them.
they?
Yeah, I don't know if you've ever heard of them before. Get off your Facebook right now. Anyway, my background in construction is going to be super useful to the value add model that we are implementing on the Conquistador apartment, and I'm really excited to add what I have to bring to the table. Jenny?
Thanks, Brandy. I am so excited to be a part of this team. These guys are absolutely amazing, and I admire everyone's work ethic, and it's been such a pleasure working with them so far, and can't wait to dive into this project. I have a passion for construction real estate. My career started with Lennar Homes right after earning my Bachelor of Science in Construction Science at Texas A&M in 1996. I started in the field as a construction manager and worked my way up, becoming the youngest division president in Lennar's history. I had earned a reputation as the fixer and was responsible for turning around struggling divisions. And then in 2008, I decided to start my own business, overseeing commercial tenant finish projects. And shortly after that, I began flipping houses. Then my career took me to overseeing the construction for multifamily, mid to high-rise apartments and condos, interior superintendent for projects in San Francisco and other surrounding cities. I currently consult for Swinnerton Builders for various mid-rise apartment buildings, while still doing the occasional flip house, and now asset management for the Regal Fund. Thanks.
Awesome. Like I said, you want to know the ins and outs of the deals and get in the nitty gritty, like how to fix it. Like Jenny, they call her the fixer, just not in apartments, but if you have problems in any area of life, she will come in and take care of that, if you know what I mean. So moving forward, we have a couple more people. This group is the systems gurus of all gurus. You want to know how we have everything scheduled and running the right way. These guys are the back end and the front end. They're just, look at their faces. First off, they're beautiful. All right, Jeff, would you like to introduce your team a little bit?
Yeah, sure. I appreciate it, Jake. Thank you. So we're the Valores Capital Partners. If you look at the picture from left to right, Jim Bone, he's our master and networker. He knows anybody and everybody in the multifamily real estate business. He's amazing. He's also one of the coaches at the Multifamily Mindset as well. Ritesh Patel is our resident doctor. He's a doctor down in Texas, and he just knows so much and is so analytical about everything he touches. He's really great. Claudio Sanchez, he's the brains behind the operation. He's I call him our chief strategy officer. He basically knows how to strategize and build and scale businesses. And then I'm your host, Jeff Irving. So with that being said, Valores Capital Partners, we're a private equity real estate firm. We specialize in multifamily as our mainstay, but we also do have land development deals. We currently have 2 ground up development deals we're working on right now. We also have light industrial. So we've got kind of a different span, three different asset classes that we're involved in. Over the last 13 months, we've acquired over 500 units and 70 million assets under management. Our goal is to double every single year. So this time next year on our next call, Jake, will be at 140 million assets under management. So
I mean, why are you aiming so low? We need to be a little higher. I'm not sure why you're setting the bar so low.
Well, that was just 1 year. I mean, just one year. So yeah. But yes, I agree. I'm not going to say the B word, but we'll see how it goes. And next, I know Latina and Demetrius Baxter are not on the sponsorship panel, but they are part of our deal. So they are the amazing power couple out of Arizona, BVX Capital Investments, seasoned entrepreneurs. They own multiple different businesses, have been involved in multiple different deals over the years. Demetrius brings a wealth of expertise and strategic insight to every venture. Let's see. So he's been involved in about 30 million under management collective net worth. But he's man. And I'll tell you what, he goes nowhere without Latina because she is amazing. She is a master of everything. I'll tell you that much. So if you ever get a chance to meet either of those two, please pull them aside, send an invite, send an email. Those two are just amazing. We're so excited to have them both on.
What I love about those two real quick is that even the first time you meet them, they're like family right off the bat.
Yes.
They are just, they're so great at making you feel loved and warmed and welcome. That's what we love, bringing them on the team. First time I met them, I was like, all right, when are we going to go over and have Sunday dinner? Like when's the barbecue? Because we're going to make this happen. Right. That's that type of relationship that we have, and they create with every investor and everyone in their life. So we're excited to have them over to us with us as well, to have that family feel.
Yeah, so it's funny story about that. So down at Peak Partnership, we went to a big conference, and I saw Demetrius, and him and I've talked on the phone a couple of times. I saw him at the corner of my eye, and he saw me. We kind of went up and said, we each other name tags. We gave each other a big old bear hug. I think he gave me the bear hug, right? But still, that's the kind of people they are. We're amazing. We love those guys. Our Ann Santos. So Ann, you got only 2 questions. We'll get to those in a minute, but let's have you introduce yourself.
Oh, thank you so much, Jeff. Hello, everyone. My name is Ann Santos. I'm a corporate lawyer, a registered nurse, and also a real estate investor. And I am managing partner at Cobalt Capital Holdings, which specializes in multifamily investments like this one. My real estate journey started in 2001 when I started operating what became a single family and vacation rental portfolio in the US and overseas. And now I'm general partner in 334 units with 32 million in assets under management. And I'm also a limited partner in over 2,000 units across several states. But really, on behalf of Cobalt Capital, I just want to say how thrilling it is to be working with such an illustrious team to bring you this amazing investment opportunity. You guys, this is amazing. Thank you so much.
And just real quick about Ann. Ann actually came to one of my classes that I was teaching about multifamily. And the thing that inspired me about Ann is the ability to take action. She did not hesitate. She knew what she wanted to do. She jumped in right away and hit the ground running without even understanding total about multifamily. She started investing right away. She started bringing her friends, her family, and she hit the ground running and has created such a dynamic team that everybody who talks to Ann, works with Ann, loves Ann because she just takes action, and she is just a leader in this space. So it's amazing to see what she's done in the short period of time that she's been within this industry.
Thank you. Thank you so much.
And then I know that Tony is also just a panelist right now. This will be my first deal with Tony, but guess who brought her in? Oh, that's right, Ann. Because Ann knows people, and people like to be with Ann who create motion. And I know that Ann and Tony have been on calls. They've been working hard on this deal in the short period of time that they've been with us on this deal. So Tony, I'm excited to meet you more, but I know that you're badass just because Ann said you're badass. So that's all you really need to know right there.
Yeah, I'll second that too, because I met Tony down in Orlando as well too, and she just has a good swagger about her, right? She's just real seasoned professional, and she is her Gems Capital investment team will destroy it and will be very successful in this business. So we're excited to have them on the team.
I like the word swagger too with there. She's got a good swag, so that was good. I think that's the best way to describe it. So after all you said and done, guys, a couple other people that I want to introduce. One of our main, I think I would want to say capital raisers and investor relations gurus is Sophie Dean. Just a small relation, if you guys didn't catch that, but this is her first deal, and she has been an integral part of this. So I just want to give mad props to Sophie for just getting all of our investors taken care of. She has been on it. So I can't say enough because, well, she's my daughter. Okay. But she's the best of the best. So who we are, we have been students, educators, and people. We've had several experiences in other businesses that we bring to this deal that will make this deal run and perform. Like I said, this is a great deal, but it's going to soar with the team that you have behind us, because our philosophy is let's take care of our tenants. And if we take care of our tenants, our investors will thrive and flourish. That is important for us to know, because in this time of craziness, we look at multifamily as a way now of bringing people back together. There are craziness going on in the economy where people can't afford houses anymore. So this could be potentially their long-term place of residence. So we want to create that feeling of community, that feeling of love. And as you can tell, everyone who's on this deal has that feeling. So we're excited to do this. We have the experience and the dedication to make this, in this next 4 years, one of the most profitable deals that you'll come across. So we're excited for your participation in this, and we're excited to get to know you as investors so we can bring you in as our family as well. So here's some of our track record that we've just talked about. Like I said, we have a little bit over 2,000 combined units. That's just with a couple of the KPs. That doesn't include everybody on our deal. We have been crushing it in the short period of time. The amount of equity we've created in the last 2 years, 2 to 3 years, has been unparalleled. Our occupancy there, lower numbers. We actually a little bit higher. We're at 89% occupancy. So we are running and getting better and better every single deal that we run. We have storage units, we have single family, we have ground up new construction. Anything you want, this experience is now, we're just laser like focused on this deal, and it's going to blow up. So I don't even know why you haven't hit the link button to sign up for the documents yet. Like, what are you waiting for? Like, I don't understand. Like, you should be on this deal and talking to your friends and family about this deal, because that's how good of a deal it's going to be. All right, so we're going to go over the next steps. I'm going to kick it over to Jeff, and he's going to talk about this.
Yeah, next step, guys. So we each have there's a cash flow portal, which is your investment portal. Your sponsor, the person who's bringing you into the deal, ask them for the link. We'll send it out in one of the emails you'll get on the end of this webinar, and which will be recorded and will be shared with everybody who signed up. Even if you couldn't make it, you're watching this in the preview or in the future. But yes, there is a portal. So you go in, you sign in, you log in, you view. You click invest now, you put your money in, you put your subscription in, sign the PPM. The PPM is what we call is the private placement memorandum. It is literally the Bible of the investment, right? It tells you all the risks associated, but tells you all the good associated with it, right? And who the investment team is and who the sponsorship team is. So after that, you're going to verify. You'll receive a verify investment email. You'll upload your personal information. You have to be an accredited investor for this deal, if we didn't tell you that already. But you do need to be an accredited investor, so you've got to be ready for your accredited status to be able to submit it online. If you need help with that, talk to your sponsor. If you need to find out if you are an accredited investor, talk to your sponsor as well too. We can definitely help you out with all that. And then after you sign, you'll get a countersign, and then you'll get wiring instructions, wire your money in, and we're off to the races, baby. We're making money. So with that being said, there is an investor portal, right? Like I mentioned. So this will be, it's a computer. It looks like a computer, right? But it's your website. So we'll see. We'll have that information for you after this email. You probably have seen it too. There's going to be a link for everybody, all the teams involved. With that being said, well, actually, we got a couple questions. Real quick, guys.
Yes, we do. We do have a couple of questions. So first question from Sharon. I think I'm going to direct this to Brandy. What type of mass transportation is available? Do you have to have a car to live in this area, and is it high density? So in other words, lots of traffic.
So I would say that Kansas City is a city where a car is required. They're working on it. But you definitely, a vehicle is required. There is a bus that runs. It's just not very efficient. So most people own cars in Kansas City.
That being said, though, the location of our building is as such that there is several shopping, there's food, there's everything that you need within a small radius that you can get to anything that you want. Kansas City is a blustering and it's a growing city. It's beginning to boom, but we choose and we look at apartment buildings where we know that, well, hey, I don't like to exercise personally, so if I can't walk there, then I'm not going there. So we want to make sure that people that live with us have a good range of options for food, entertainment, locations to bus stops and things like that if they don't have access to a car. So we've chosen a spot where I feel like it's going to be very beneficial all the way around. And no, we're not going to provide cars for all our tenants. That's not within our budget. Okay. So, but we do have the ability to make sure that they are going to get access to easy transit.
The other thing that I would say is that you can get anywhere in Kansas City in 20 minutes today. It's growing. It's a growing city. It's been steadily the population of Kansas City has been steadily increasing over the past 20 years. But 20 minutes is the deal. I live in the Bay Area, so I miss it, right? Like you can't get anywhere in 20 minutes here. But everything's about 20 minutes away.
So a couple questions. Oh, sorry.
Sorry, I just wanted to add to Merriam specifically actually is putting a lot of money and resources into like fixing up the sidewalks and making them more walkable. That was a project that they started, I believe it was in 2019, and they're continuing to do that year over year so that that Merriam itself is becoming a more walkable city as well.
And Jim actually just mentioned that, KC streetcars run regularly there, and there are also a lot of biking trails.
Yeah, the streetcars, like the downtown area, and and it's free, which is awesome. So you can get on the streetcar and ride anywhere it goes for free. But it's downtown Kansas City.
Okay. Next question, also from Sharon. So how many deals has the Regal Fund successfully negotiated or flipped, and how many didn't go as planned, and what circumstances led to that conclusion?
That is a great question. So we, as the Regal Fund, we have not exited a property as of yet. So we haven't gone full cycle on ours. I know Sean has gone full cycle on several of his deals, but as a group, we have not gone full cycle yet. We see that have there been problems in some of our deals? Of course there are. If we didn't have problems, I don't think this job would be as fun without the problems that we encounter. But we've been able to circumvent a lot of those deals. One of my deals specifically that we did in Beltline, we had month-to-month renters, and we had a mass exodus in the middle of our construction. What we were able to do is we found, with our key principles and our strategic team that we have here, we found options for that and opportunities in that. We were able to connect with the VA. The VA came in and they said, yeah, we'll rent all your units once they're brought up to code and above market rent. So we are able to rely on the information of everyone that's around us. We ask questions. We don't think that we are the know-it-all, end-all, be-all in multifamily. So we're going to find and bring in experts that need help. We are currently operating well above now in our DCSR and all these properties, and we look forward to exiting them as soon as we can on a profitable side. That makes profitability with our investors. Anything else? Because Sharon's got great questions. That's all I know so far.
She's got another one fired up there. Yeah.
Yes, exactly. So there's the last question is, what is an accredited investor? And so people who have this question will be wanting to listen to this response. There's actually financial criteria to define what an accredited investor is. So it's either annual income of $200,000 for an individual or $300,000 with a spouse, and with the expectation of that continuing over the next 2 years, or net worth of $1 million, not including the primary residence. That's the definition.
So, and if you have any questions on that, what we do to verify at accreditation, you'll have a self-accrediting letter that you can fill out. We actually use a third party that you'll be able to fill out that documentation, and your CPA will be able to sign off at this saying you're accredited investor for us. We just want to make sure that we're in legal standing with the SEC. So if we ever do get audited, we can show everything perfectly on the books.
Yep.
Excellent. Yeah, Sharon, excellent question. So whoever your main sponsor is, reach out to them and they can help you out with any more of those questions we have. But I guess we'll give it another minute out there if anybody has any follow-up or further questions. Otherwise, we're going to give you guys back 9 more minutes of your time and have a.
That's how efficient we are. That's how efficient we are. We're giving you back time. Like no one does that. So you're all welcome.
Yes, exactly. I love it.
Well, yeah, exactly. All right.
Yeah. All right. So I think that's it, folks. Well, hey, that's a wrap. So thanks again for the opportunity. Reach out to your sponsors. You'll get another email. And also in the email you got to register should be a link to your sponsors cash flow portal, where if you're ready to go put an investment in, don't hesitate. We expect this to fill up, and we expect it to fill up pretty fast because of how exciting this opportunity is. So thank you so much, everybody. Thank you, sponsorship team. Jordan, thank you. Jenny, thank you. Brandy, thank you. Sean, thank you. Jake, thank you. And Ann, thank you so much. Have a great night.
Thank you,
everybody.
everyone. Good night. Thank you.
Good night.
Bye.
Bye.